Imagine waking up one morning in 2026 to find silver trading at $100 plus per ounce. A life-changing gain for early believers. Or worse, watching it plunge 30 to 40% in a brutal correction after the massive 2025 rally. Which one is reality? Right now, in mid-January 2026, silver is hovering around $75 to $80 per ounce, after exploding over 160 to 180% in the past year. The big question: is this the start of a historic moonshot, or the calm before a painful crash? Let's dive into the full, no BS analysis, the drivers, risks, expert views, and what it means for you. The explosive 2025 recap: why silver went parabolic. Didn't just rise in 2025, it dominated, starting around $29 to $30 per ounce at the beginning of 2025. It surged to highs near $80 plus by early 2026. This was fueled by chronic supply deficits. The market has been in shortage for years, with demand outpacing mine production by hundreds of millions of ounces. Record industrial consumption. Over half of silver now goes to green tech and high-tech industries. Investor frenzy, ETFs, retail buying, and short squeezes amplified the move. But 2026 is a new chapter. The momentum is strong, but so are the risks. Bullish case: why silver could skyrocket in 2026. Most analysts are leaning bullish for 2026, with silver potentially testing $100 or even higher in optimistic scenarios. Here are the unstoppable forces pushing prices up. Explosive industrial demand, the real game changer. Silver is no longer just a poor man's gold, it's a critical industrial metal. Over 50% of demand comes from tech and green energy. Solar PV. Each panel uses silver for conductivity. Global installations are exploding, with China leading and Europe mandating more integration. Demand from solar alone could hit new records. Electric vehicles, EVs. EVs use 67 to 79% more silver than traditional cars. With millions more EVs on roads in 2026, this sector is a massive tailwind. AI, data centers, and electronics. AI boom means more servers, chips, and 5G infrastructure, all hungry for silver's unmatched conductivity. Experts from the Silver Institute predict industrial demand will keep rising through 2030, creating structural shortages. Persistent supply deficits. Mine production has plateaued or declined. Recycling can't fill the gap. Cumulative deficits since 2021 exceed 800 million ounces. Tight supply plus rising demand equals higher prices. Macro tailwinds. Inflation still above targets, making silver a hedge. Expected Fed rate cuts or steady liquidity support precious metals. Geopolitical tensions and currency concerns drive safe haven buying. Gold-silver ratio favors silver outperforming gold. Expert forecasts, bullish side, retail traders and surveys. Many expect $100 plus in 2026. Bank of America. Silver could outperform gold, with potential highs of 135 to 309 in extreme scenarios. Optimistic analysts, e.g. the Oregon Group, some technicals, $150 or more if shortages intensify. Long forecast models, prices climbing toward $100 to $140 plus by mid-late 2026. If these trends accelerate, boom, silver could skyrocket, delivering massive gains for holders. Bearish risks. Why silver could crash or correct sharply. No rally is one way. Silver is volatile. Corrections of 30 to 50% have happened even in bull markets. Key risks for 2026. Overbought conditions. After such a huge run, profit-taking is normal. We've already seen pullbacks in early 2026. Stronger US dollar or rate hikes. If the Fed tightens unexpectedly, precious metals suffer. Industrial slowdown. Recession could cut demand from solar EVs, though green mandates provide some buffer. Margin calls and liquidation. Higher futures margins have already triggered sell-offs. Bank forecasts, conservative. Many institutions see averages around $55 to $70, calling current levels unsustainable. Consensus range for 2026. Moderate base case, $70 to $90 per ounce. Bullish scenarios, $100 to $150 plus. Bearish pullback, $60 to $70 or lower temporarily. The real truth, my balanced verdict. Silver won't crash to old lows like $20 to $30. The fundamentals are too strong with green energy and tech locked in for years. But don't expect a straight line to $200 either. 2026 will likely see high volatility, sharp rallies on demand news, short squeezes, followed by corrections on profit-taking or macro shifts. The smart play? Silver looks positioned to go higher overall, potentially skyrocketing toward triple digits if industrial demand and deficits dominate. But prepare for swings. If you're invested, hold strong positions, buy dips, and diversify. You're on the sidelines. 2026 could be the year silver truly shines as both a hedge and a growth play. Final call. Skyrocket, more likely than crash, but with turbulence along the way. The white metal's dual role, precious and industrial, makes it one of the most exciting assets for 2026. What do you think? Are you buying the dip or waiting for a pullback? Drop your thoughts below.